Allison is with the Money Farm. I wanted to say the Money Tree, but something tells me they're not quite the same now, are they? So, all right, Allison, welcome to our adventure today. Tell us more about you, what you do as a commodity broker.
Yeah, I'm a commodity broker, market analyst with the Money Farm, and actually, I'm really happy to announce that I am the new owner as of a week ago. So I'm very excited to be taking on the business. I know a lot of people in the industry know Mike Kruger, and I'm very excited to be taking on the legacy that he started 37 years ago. So I work with a lot of farmers and producers, seed companies, things like that on protecting their needs, their crops, hedging, all those types of things. I also work on some individualized marketing plans with growers, more personalized plans for making sales and things throughout the year. So right now we're finishing up with 22, looking ahead to 2023.
Interesting. Now, Allison, so you do a lot of you do some hedging, and what's the difference between that and do you do any day trading with any of the commodities
Yeah,
at all?
actually, we do. We call that spec trading.
Okay.
More or less. So we keep it a little bit separate. On the farming side, yeah, we trying to keep them just into strictly hedging accounts, which is protecting prices where they are right now. Protecting the downside. So if markets were to go down, we're at least protecting our bottom line. So we are starting to look at some hedging strategies for next year. Otherwise, yeah, day trading, spec trading, we do a little bit of that as well. And actually, we actually recommended some yesterday. We are into the orange juice market right now. So
there we go. Now we're talking.
volume than our typical commodities, but it's fun.
Now, okay, so I know this might sound like a crazy question, but we hinted at it before the commercial that so the movie Trading Places, I'm sure you've seen it, correct? No? That's okay. No. So it's basically it was Eddie Murphy and Dan Aykroyd, and this was made in the 80s, I believe, maybe 90s. I don't know. It's a while ago.
No, it was the 80s.
Was it the 80s?
Before these guys were born.
So
yes, you and me here. You and me.
There were two brothers on the stock market on an exchange board, and they wanted to corner the orange juice market. So they ended up getting the orange juice report before it was released, and they actually cornered the orange juice market. How realistic is that? It's a movie, but it's obviously it's highly illegal. But highly illegal.
You should not be cornering the market.
Right.
And you bring that up on a USDA report day and all those good things that come with that as well. But yeah, no, there is no early releases that we should be seeing here. Okay. We always try to outguess those things, but even that's a fine art. So
right. Now we use a long range forecasting tool called the LRC, and it's proven to be accurately forecasting major events out 6, 7, 8 months with an 80% accuracy. So in other words, is there going to be flooding? Is there going to be drought? So if we know that there's going to be flooding down in South America, soybeans, corn, all that down there. If we know that in advance, how does that affect the markets here?
Well, it definitely does because they are big producers down there, mainly for corn and soybeans. That's what we're really watching right now. We're actually kind of in a weather market for South America because they haven't had ideal conditions this year. But yeah, knowing those types of things, like we've been dealing with La Nina for the last couple of years, and that's affected their crop production as well. So now we're starting to look ahead on what La Nina is going to do. So your LRC maybe can give us some ideas of what's to come because we're definitely watching South America's weather. But obviously it's going to affect their crop production. And even today, the USDA report did lower Argentina's crop for both corn and soybeans. More than we were actually expecting them to. So we compete a lot with them on the export market. And if they have a big crop, they definitely can export more. And that does cut into some of our demand. So it is something definitely worth watching about, especially since a lot of our crop up here does typically go for exports.
So I hate to say, really, you hate to wish negative things, but if they're suffering a drought, then that's better. That's better for our prices up here, correct?
Yeah, absolutely. We've seen a really good weather premium remain in both corn and soybeans since harvest, and that's really not typical. And again, a lot of it has to do with weather and supply and demand factors on the world market. And if those factors do remain there, yeah, it's definitely keeping us alive and well. Above $15 beans, we're getting up to $7 corn again. So all good things and worth watching. But yeah, you hate to wish suffering on other people's
Right.
crops, but as long as it's in here, we don't feel too bad.
Right. You had just kind of
Yeah.
touched on that a second. We're kind of working back up to $7 corn. Is $7 kind of like the peak, or is that where it has generally been in the past?
Well, no, we're sitting on some high prices we haven't seen in a few years. The last couple of years, we've had stronger prices, but it's not normal to see such high prices this time of year. Last year, we had some good crop insurance prices set in February as well, which is definitely worth noting. We're definitely watching those numbers, but $7 seems to be resistance as of right now. Looking at it chart wise, we've had a hard time breaking above that here recently. So it's definitely a number we have in mind going forward, especially for those who have old crop. I think that's all kind of a number we have in mind and would like to get back to. And right now we're starting to talk about South America's second crop corn coming in, and they haven't had the best ideal conditions to get that crop planted. So maybe we'll see $7 ahead if those conditions continue.
Right. I was going to ask, besides, kind of what's going on down in South America with their crop, their harvest, what are things internally here in the United States that would cause prices to go down or along those lines to where you hit that resistance and it just can't break through it?
Yeah, absolutely. So, also touching on that today, you guys got me on a USD report day, so I have all kinds of fresh information to share with you. But we've actually been a little bit more concerned about demand for U.S. crops here domestically. We have not been having strong exports specifically for corn and wheat markets. So those things have fallen, and when it does do that, definitely hinders our price movement to the upside because we're not getting rid of it and we're sitting on supply. Stocks are still relatively tight, don't get me wrong, but we're still not seeing the same usage we have. So exports is one thing. We're also seeing some other domestic usage. Ethanol got cut in today's report, as well as soybean crush. So some of those usages did go down, which probably hindered our rally a little bit following today's report.
Right.
They did not touch exports, though, in today's report. So I have a feeling we could see some of those cuts coming down the road in the months to come.
I see. And before we kind of dive into that route, we'll have a bottom of the hour break coming up, but I want to get one more question in here because it's kind of related to the topic that we're touching on. And this is something that I throw at Bridget all the time. Anytime I can just kind of throw a curveball at Bridget, I like to do it. But with Ukraine, with the agreement going on over there with Russia for the grain exports, and we're hearing all this stuff about the Black Sea, and it's getting more expensive and it's more dangerous. Less ships are going in and out. They're having a hard time getting the grains out. How do markets over there and their exports affect things here in the United States? A lot of our things don't necessarily come from Ukraine, but all the markets are kind of tied together. So what kind of effects does what's going on over there play into our markets, if there are any?
Yeah, well, interestingly, it's almost been a year since we've had the start of the Ukraine conflict beginning. So this isn't new to the market, and obviously going on a year, it's kind of settled itself out a lot considering the volatility we had when it first all started.
Mm-hmm.
But as of right now, it's really settled down. We haven't had a whole lot of fresh news on the grain side of things. Their export deal's still going. But from a grain market standpoint, the Black Sea, Ukraine, Russia, they do have supplies available on the world market, and they're able to sell them and offer them cheaper on the global market at a cheaper price than what we can. So they've actually seen a decent amount of export business over there compared to us. And obviously right now there's a lot of countries with the economy the way it is struggling to get, they want cheap food needs. Basically. Mm-hmm. So when these other countries are able to provide that at a cheaper cost, that's where they're going. So, and right now, they're able to do that through the Black Sea area.
Awesome. Well, we're speaking with Allison Thompson from the Money Farm. She's a commodity broker and now the owner.
So, Allison, my first question for you is, when you think about the reports that you mentioned coming out, like WASD and other USDA reports, how do those affect the market and why? Because you and I probably throw around those sorts of terms and maybe they don't make a lot of sense to everyone who's listening. And how can it impact what a farmer might be able to sell his crop price for?
Yeah, absolutely. Well, the USD is obviously our biggest source of information, and whether you want to say it's lucky or not, I guess you could debate that. But we do get updates every month on what they're currently looking for outlooks, for supply and demand on the three major grains. And of course, there's other commodities that are included as well. But of course, here we're more concerned about corn, soybeans, and wheat. So these reports do come out, like I said, every month, and then we have some quarterly stock reports as well. But it gives us a better idea of what the trade is looking at, what we're looking at as far as supply and demand going forward. Any production issues, like we're talking about South America, those types of things will be taken into account each month and are subject to change. So they've definitely become market moving reports, whether that's good or bad. But and of course, prior to these reports, we get early trade estimates from a lot of private analysts on what they think is going to happen. And of course, the markets trade them. So whether or not we get a good trade opportunity that day can definitely be dictated by some of the reports. But lastly, now with a lot of the internet the way it is and social media and things like that, a lot of the numbers and stuff are somewhat priced into reports. And I think that was part of it today too. We know that the weather issues are down there in South America. So them lowering production today wasn't a huge surprise. As well as some of the demand things, they were kind of widely expected in the report, but we're starting to see a lot of more of it getting already traded into the report prior to its actual release. But it definitely gives us opportunities. Like even today, we did get a decent update. So you have to take advantage of those rallies when they do come.
These are, we have so many folks that listen and they talk about the nostalgia of when dad or grandpa farmed. But things have changed. We truly operate in a global market, and all of these impacts, whether in South America, what's happening for trade in Ukraine, Russia, and Turkey, all of us, it impacts us so much more every single day than we might realize. And now that we're going to have 3 soybean crush plants coming into the state of North Dakota in the next, well, let's say 4 to 5 years, what do you see doing for our soybean acres and prices as we go forward with those crush plants, Allison?
Well, it'll definitely be interesting. It's definitely going to be competing for some end users. I definitely think, like I said, we're kind of a big export area up here, so a lot of our stuff goes overseas. So to have some more domestic use here definitely is going to make some competition of where our product goes. And it'll definitely should help some prices. That's true. We'll definitely have some more usage coming on board. But it might be more of a local play more than anything at your local elevators and against these plants, maybe competing a little bit more on the basis side. But it is good to have another option right here in our back door. It definitely helps the outlook as long as biofuel markets and things like that stay strong as well. It definitely should help our outlook.
And Allison, how did you get into commodity broker, and what do you find is the most challenging part of your job?
Well, I actually went to school to be an ag teacher. I actually taught high school ag for 1 year and realized
Me too.
realized that wasn't quite my calling though. So I decided to work with farmers every day. I was a farm business management instructor for a few years with Lake Region State College out of Devil's Lake. And then I got the opportunity to move in with the Money Farm with Luke Swenson and Mike Kruger. And I absolutely love the markets and market planning and things like that. So it was a very good move for me, move closer to home. My husband farms with my dad near Monoma, Minnesota. So it's been good, but yeah, it's always a challenge. You can't outguess markets. Your hindsight's always 2020. So, but we're always trying to find the best information and strategies out there. So it's an ongoing challenge, but that's what we love.
It sounds like weather. You're trying to forecast the future, and
Yeah.
you're trying to be as most accurate as you can.
Right. Yeah. Yeah. That's exactly it. Pretty much. Pretty much.
What would you say to somebody that wants to maybe get into commodities or trading them? Is it something that's easy to do? Is it hard to learn? And do you need a sizable amount of money to start, or can you just kind of walk in, a few $100s to a few thousand like you can on the stock market, and you're just buying, the smaller things, and you slowly work your way up?
Right, right. When it comes to the trading side, yeah, there are smaller contracts you wouldn't have to do, a full-size contracts. There are minis out there which are half the size. So it just depends what everybody's risk level is. Everybody's risk level is different. So that's kind of why we like to work with you one-on-one and kind of, talk with you and understand what kind of position you're looking for, what you're wanting to do, what you want to trade to do. But yeah, you can open up an account with any brokerage firm. We have one here in-house. So they can certainly open a trading account with us. Our clearinghouse is ADM in Chicago. So we go through them. And then once they have something set up, it's kind of, they can basically trade anything they would really like for that matter. But yeah, we do try and stick with the three main grains, of course. But yeah, it depends on everybody's risk. Everyone's risk level is different.
I see. And is there, I guess I don't know how to say, is there like a recommended number? Like if you're going to do this, try and walk in with $25,000 or something like that. You see where I'm trying to go with that?
I guess I do. Coming from the farmer standpoint, though, we don't necessarily always look at it as a money thing going in and out. A lot of these guys are hedging production needs is mainly what I work with. So when they come in, we're hedging a certain percentage of next year's crop, which we look at production wise, which is in bushels. So we're taking certain percentages of bushels, which amount to contracts. So that's kind of how we look at it in my career field, rather than a lot of the stockbrokers and things like that. They could look at it as money, putting money in. But on my side, we definitely look more on the production side and hedging our production needs.
What about short sellers?
Does that make sense?
It does. Do you have short sellers in the commodities as well? And if you do, how are those tied into prices?
Short sellers.
Like you can short on a stock where you're buying it, expecting it to go down in price, and that's how you're actually making the money on it, is that the price goes down because I think how it exactly works is you're buying it with someone else's money and then selling it back to them for a cheaper price.
Well, yeah, buying and sellers. Yeah, it's the same thing in the market. We have funds. We have fund movement that comes in as well. That's actually been one of the biggest players in our market. The funds or managed money is definitely long right now. So we're concerned about is when those monies start to move out too. It'll definitely take our markets down. So that's probably more of what we're watching on the commodity side, or where the hedge funds are at on a weekly basis. But unfortunately now this week, the U.S. or their report was delayed. So we don't actually know where they're sitting this week. So it's a guessing game. Hopefully we'll know in the days to come of where they are. But yeah, we do watch that on a weekly basis.
I see. And before I know Bridget's got, I think she had a couple more questions for you, but before I toss it over to her, we were kind of teasing at the beginning of the show, if they're going to start using a corn biodiesel or biofuel for jet airlines and the whole potential corn GMO ban from Mexico, what might that look like in our area? If there's a higher demand for corn for those two different things, or maybe the ban in Mexico would kind of limit that, but how would that affect our area, or what would it do?
Yeah, it would definitely affect our prices here, I think. The usage thing is definitely a positive for our area, especially when it comes to biofuels. We've definitely seen the biofuel market really, really pick up here, and it has given us good support to both corn and soybean markets. Looking at the Mexico side of things, that one could definitely be a hindrance. But again, from what we've been hearing, and rumors go back and forth, this seems to be a couple years out. But from what we've been hearing is that it mainly will be, it could affect livestock feeding a little bit more. So it'll be interesting to see how the tables all figure out on that one. But obviously, any new usage coming online definitely helps for demand. The question is if we have the acres to meet those demand needs. Obviously, around here, we're not strictly corn and soybean growers. There's also a lot of specialty crops, wheat, canola, I mean, you name it. There's a lot of different ones that come into the mix. So it's definitely going to increase competition against not only the other grains, but also these specialty crops as well in our area. So it should be beneficial to price. But again, there's a lot of unknowns here, and it's still years out before we really start to see it.
I see. Well, I think we're running low on time. I know that Bridget had a couple of questions, but I think that we lost her connection to the station here, so we're going to get that reconnected. But we want to thank you for joining us. And if there's people out there listening, they have more questions, they want to get more information, where can they go to get that information or get in contact with you and your business?
Yeah, we're always happy to take phone calls, up days, down days, and everything in between. You can give us a call at the office. The number is 701-347-5985. Otherwise, you can visit our website, themoneyfarm.com, or you can always send me an email at Allison, Allison, at themoneyfarm.com.
Awesome. Well, thank you, Allison. And when weather and